Welcome back to ABG Investor Days. My name is Simon Jönsson, analyst here at ABG. And next up, we have the honor to welcome Erik Grohman, CEO of Awardit. And with that said, I'll leave the floor to you, Erik, and we'll come back with a short Q&A at the end of your presentation.
Thank you, Simon. The honor, of course, is all mine to be here. My name is Erik Grohman. I'm the CEO of Awardit Group since about 2.5 years ago. I joined in March 2022. And very briefly, some of you might know Awardit as a business. But Awardit is the market leader in full-scale loyalty and gift card solutions in the Nordics. And we also have a strong footprint in the German-speaking markets of Europe, what we call DACH. We cater for basically all needs that our clients might have within gift cards and loyalty offerings. So we provide strategy, conceptual advice for clients. We provide SaaS-based technical platforms to run programs. We provide operational support to actually manage the programs. And we provide also operational support in terms of fulfilling programs with products, offers, services, logistics, etc. So basically, the full ecosystem within loyalty solutions and gift card solutions. And Awardit was founded in 1999. It went public about 6.5 years ago, in December 2017. And after the IPO, the company has made 12 acquisitions, and I will show you a bit more about that later on, to build this position of being the leading provider in loyalty and gift cards. And today we have offices in Stockholm, where the headquarters are, in Gothenburg, in Copenhagen, in Hamburg, in south of Germany, in Weingarten, and in Wels in Austria. And that's a combination of offices where we have acquired businesses. And our vision with this business is to become the leader across Europe within our business segment. And as I said, it's full-scale loyalty and gift card solutions. And what we do, basically, our mission, what we love to do, is to help our clients to improve their customer satisfaction and retention and sales. So really helping our clients with their business toward end users. Might it be consumers, customers, clients, employees, etc. And we have a full proprietary tech-based SaaS platform covering all these aspects that we provide services within. And we have more than 250 programs running today in the Nordics, covering more than 15 million consumers, and actually covering more than 15 million consumers across the DACH region as well. And historically, the business has seen strong organic growth, and we have been able to combine that with add-on acquisitions. So growing both organically and through acquisitions, and also adding competency and adding pieces to our sort of full-scale ecosystems from acquisitions. And what we see is that the market in Europe continues to be fragmented, and we believe that we can continue to consolidate the European market, as we have done in the Nordics, and we have begun to do across DACH as well. And just looking briefly on the timeline of the business, from the IPO in December 2017, we have made the 12 acquisitions that I mentioned, and building then the position within both gift cards and loyalty solutions. Acquiring 9 businesses in the Nordics, and then acquiring the last 3 businesses in DACH, starting with Premier Direct in December 21, which is a loyalty business based in Hamburg, then continuing with Connex in February last year, which is based in Austria, in Wels, and then November last year, IPO, not IPO, we usually say IPO, in south of Germany. So now building a strong position in DACH as well. And just looking back over the past couple of years, we have some strong growth to show. The business has been growing, and last year we delivered revenues of 1.15 billion Swedish crowns. we made an EBITDA of 76 million Swedish crowns, and we had problems and challenges in our Danish subsidiary MBXP, which is a gift card business last year, which set off the EBITDA with around 20 million from one-off events and adjustments last year. But really, if you look at the underlying growth also of the business, that comes from the old business before the acquisitions. So on the right-hand side here, you can see that the yellow part is the old business before the acquisitions that we made in 21 and 23. So that has also continued to grow. And also last year, it showed a growth of 9%. And then on top of that, we have added the businesses of Inspiration Company, MBXP, Premier Direct, Connex, and IPO, here shown with blue. And in the first quarter of this year, we continued to grow. We had a revenue growth of 35%, delivering a net revenue of 225 million SEK. So in loyalty, this is in loyalty, sorry. So here I divide it by loyalty and gift cards. In loyalty, we had a growth of 35% and delivered 225 million SEK. However, the organic growth in the first quarter this year was 0 in the loyalty business. And even though we continue to grow in the Nordic business, here we have rather strong development with our existing clients, our large existing clients, and they continue to grow even though their markets are challenging. We continue to grow with them. However, in Germany and the German-speaking markets, we have a negative growth for the first quarter compared to last year. And that's because we have a different kind of business there. It's more campaign-based. In the Nordics, we have a higher proportion of sales through long-term points-based programs. In DACH, we have a higher proportion of sales through shorter-term campaign-based loyalty campaigns, such as acquisition campaigns for new clients, etc. And those are more vulnerable to the economic times. So we have seen a challenging market in DACH and therefore negative growth in first quarter in loyalty. Also then, the acquisitions of Connex adds to the non-organic growth of the first quarter by 9.5 million SEK, as they were not organic in January this year. And also IPO adds 49 million SEK of revenues for the loyalty business, as they are not organic to the business. But organically, 0 growth, and then topping up with acquisitions. And in gift cards, we had a net revenue of 61 million SEK. So the gift card business is roughly a quarter of our business. And here we also saw a negative organic growth. So negative organic growth by -2% in the first quarter. And this is primarily due to the business of vouchers and gift cards in DACH is also rather campaign-based, where we have large clients that buy bulk stock of vouchers and gift cards. And those sales did not materialize in Q1 this year, as well as last year in Q1. However, the good news is that MBXP, our Danish subsidiary in gift cards, is back to year-on-year growth in the first quarter, and also showing profitability in the first quarter. And looking at the full business year-on-year, we had a growth of 29% on a total level. So that is 286 million SEK revenues compared to 222 last year. And here we had a non-organic contribution from Connex and IPO of 65 million SEK totally. So organically, on a total level, Q1, negative organic growth by negative 0.6%. And on a total level, including acquisitions, 29% growth of the business. And again, the Nordics is growing and doing well, but we have the challenge in DACH with the market situation and higher proportion of campaign-based sales, contributing to the total negative organic growth for the quarter. And just comparably, Supergift is our own multi-brand gift card, and that continues to go well, and we had sales comparable to last year in the first quarter as well. On an EBITDA level, we showed 25% EBITDA growth for the first quarter, delivering 8.9 million SEK compared to 7.1 million last year. And here, the quarter also had costs related to the public offer made on the business, and those costs in the first quarter were 4.9 million SEK. So adjusted for that, the EBITDA was 13.8 million SEK, and that can be compared to an adjusted EBITDA last year of 11.5. Then we adjust for the acquisition of Connex that happened last year in Q1. And just to mention, obviously, the costs related to the public offer that we took in Q1 were only costs that occurred on our side, of course, not on the bidding side. So these are costs from legal advisory, from financial advisory, and from obtaining a fairness opinion on the bid that then became public in late March. So we also then, just to mention, we had non-organic contribution on the EBITDA, which was negative for January in Connex, but positive for the quarter from IPO. So on an organic EBITDA level, we showed a negative growth. We had 3.6 million SEK compared to 7.1 million SEK last year, Q1, organically. Yes, so I hope you're all following me here. It's a lot of different numbers, of course, but you can find this presentation also, of course, on our site. This is our Q1 presentation. If you look at our organic business, again, looking at the business without the acquisitions from 21 and 23, that continues to stand strong. And we showed 8.5% growth in that business in Q1. And then adding on top of that, again, all the acquisitions coming in to that also, of course, contributed to the total growth. But it's another way to slice it and dice it. We tend to look at it as first, what is loyalty, what is gift cards? Then is what is organic, what is on top of organic. And then I also want to look at what is the core business without the acquisitions for the past years, and then what is added on top of that. So it's really to simplify for you to follow what's going on here. On a gross margin level, the gross margin over time strengthens, and we see that also in the first quarter. The Q1 gross margin was 32.7% compared to 32% last year. And here, Connex, as some of you know, comes into the business with a higher gross margin and then higher personnel costs to deliver their products. And because Connex comes in also now for the whole quarter, for the full quarter, this Q1, it brings an added strength to the gross margin. And also worth mentioning that Prämie Direkt, also, even if they had challenging times in terms of the revenue numbers and the sales, they showed a stronger gross margin for the quarter. So coming out actually profitable from the quarter, which is a positive sign. Now we just also need to sell more, obviously. And then looking at the P&L, we can see that, I mean, usually, and this is the case in the first quarter as well, commodities, cost of commodities is higher, and that's due to the increase in sales, of course, and adding businesses to the mix. In other external expenses, it's worthwhile to point out that most of the changes here is coming from the addition of Connex and IPO that were not there for the full first quarter last year. And also in other costs, there are the public offer costs of 4.9 million SEK that I mentioned, to be compared with 4.4 million SEK last year. And for those of you that are interested in the cash flow of the business, we had a positive cash flow in the first quarter by 27 million SEK from the operating business. And here it might look a bit strange as we have a negative cash flow from investing activities, but that is primarily from shifting from having cash at hand to making some short-term investments in cash-like assets. So we're making investments here to balance how much cash we have at hand and what interest we can get elsewhere and what return we can have for this cash. And also in financing activities, we paid back basically part of our revolving credit facility. So we repaid 90 million of that. And that's what you can see in the financing activities here as well. And for the operating business, you can say we had a negative cash flow in the fourth quarter and now a catch up in the first quarter this year. And therefore a much higher positive cash flow this year compared to last year. And last year we had the reverse. We had a positive in Q4 and negative in Q1. And that's primarily due to adding IPO and other businesses to the mix as well, that we see a shift in how the operating cash flow compares to last year. But the way we should see it, in my view, is Q4 and Q1 combined in terms of operating cash flow. And if you want to look at a cash position, in my view, to make that comparable, we should look at also including the payback we did of the loans of the revolving credit facility. And we should also look at the cash-like items that we have invested in. So the way I calculate it, our cash position end of Q1 is around 309 million SEK, which is a strong, of course, cash and cash-like position. So to summarize, the business is growing organically. I think we will meet some tougher numbers mid this year, as we had growth last year from extraordinary events, primarily connected to SAS Eurobonus development last year. But still, the organic business continues to grow in Q1, and I believe we should be able to continue to grow organically also for the rest of the year. Also, we are seeing that our strong position in DACH pays off. We are in good dialogue with many clients, and we are reaching wider than ever before. We're also working on synergies across the business units that we have acquired in DACH. So really high potential to continue and come back to growth in DACH, and also look at potential additional acquisitions in the area as well. We also are working on cost savings and synergies across the group. We announced last year we're looking to save 15 to 20 million SEK on cost synergies, and we are on track to achieve that. However, most of those will be balanced and offset by other investments and partly by inflation, but still what we set out to do to save the 15 to 20, we will achieve. Also, we see a strong potential to launch our own private label products across markets and really accelerate our portfolio of those. We have launched the Super Gift product in DACH. It's called Super Gutschein, of course, there. And we also have the potential to launch products like the hotel vouchers that are highly profitable and only existing in DACH today in the Nordics, etc. So huge potential to drive those kind of business-like synergies as well. We also see a steady flow of new clients. Primarily, we see it now in the gift cards segment, but we also are in negotiations and discussions with clients on the loyalty side. So I still have a strong belief we will be able to sign new clients onto our loyalty platforms this year as well. We're also looking at additional value-creating acquisitions. We have a pipeline of interesting acquisitions, both in existing markets and potentially new markets. So I believe we can continue to grow, not only organically, but also looking at future acquisitions. Maybe worth mentioning, we have done an internal audit last year. We put down quite a lot of work in cleaning out the MBXP business, and that is now done. And the business is on track as far as this year goes. So that's also a good sign, and we can focus on other things while also driving profitable growth in MBXP. And our vision is, of course, to continue on our path to become the European leader in the gift cards and loyalty industry. All right. So with that, I hand over to any questions from the crowd or from Simon.
Thank you, Eric. I want to start off with maybe giving some more flavor on the Nordic operations, or the core operations as you refer them to, which you said is still performing well, still growing.
Yep.
So I mean, can you talk a bit about the growth from new clients compared to the existing clients, basically? So existing programs.
Yes. So basically, if you divide our Nordic business into two, you have the gift card business and the loyalty business. And in the core there, I mean, in the Swedish gift card business of processing gift cards for clients across the retail industry, we grow mainly by adding new clients to our platform. I mean, we do have growth still with some of our clients. We activate the clients. We grow through integrating gift cards closer into their core business. But then we add also about 10 to 12 new clients of different kind every year. And that is a high profitable growth because we don't add costs to our platforms or operations when adding these clients to the platform. In the loyalty business, on the other hand, we grow mainly with our existing clients today. I mean, historically, we have also shown organic growth from adding new clients to the platform. But for the past year, we have added rather few clients to our Nordic loyalty business. And the main share of the growth therefore comes from working with our existing large clients to continue to grow with them. And some of them have been clients with us for a very long time, and we still continue to grow. From adding new partnerships and new ways of earning points into the programs, from activating new ways of engaging the users of the programs, from activating more client segments in the programs, running better and more effective campaigns, adding value both to us, to the users in the programs, and to our clients. So most of that growth is coming from existing clients. And then we are on a hunt, of course, to add new clients to the platforms.
Thank you. Turning to DACH. It has been under pressure for some time now.
Yeah.
You talked about it. Germany specifically, I think.
Yes.
So when do you think that you can see sort of the lights in the end of the tunnel?
So, I mean, I believe that on a total level, we should be able to grow in DACH this year compared to last year. And then it's a bit different across business segments, because we still see that the campaign-based loyalty sales is under pressure. So that needs to be offset by growth in other areas. I believe we will be able to grow within gift cards and vouchers, which is a rather large share of the profitability in Connex. And I believe we will be able to grow in the more points-based long-term loyalty program business. And that's primarily the business also of Connex, but also of IPO and partly of Premier. But I think we will not see growth in the campaign-based business this year, but it will be back on track end of the year, and may hopefully starting to grow next year.
All right, thank you. And in regards to the current bidding process for a company, I read in the media that your new largest owner have hinted that they want to see higher investments here. or reinvestments in the business. So can you share just some light of what kind of increased investments we might see here?
No, I don't think so, actually, because I think you have to ask them about that, because it's their statement, and I don't want to sort of put any words into their mouth. But I mean, in my view, of course, there are investments for the future that are really interesting in terms of new M&A opportunities. There are potential larger acquisitions to look for, of course, to continue the growth path that we're on. And I think also, I mean, we are seeing, in my view, that we're also catching up on where we are in terms of the tech platforms and synergies across platforms, also in the people structures. So obviously, to take the next steps there, I think we can be able to become even stronger and even better, realize synergies across different tech platforms, etc. But also to get there, we need to make some investments, of course. So that's my view of the business, and I think that's the direction of travel for sure. Yeah.
All right. Thank you. That's all we have time for. So thank you, Eric, and thank you, the audience as well, for tuning in.
All right. Thank you. Thank you.